Hello, hello, hello. Welcome back to Embody Your Empress. I'm Sarah King, your host of this beautiful podcast, here for you to inspire, motivate, and educate you on maybe something you don't know much about, or perhaps you are an expert in the background. Today, we are joined by a very special guest, a good friend of mine, Cassie Dittman from Crowell Financial. Cassie has been my own personal mortgage broker and when I've needed to check finances. So I know that we are in good hands today. We're going to learn so much. And she comes from such a knowledgeable background, from working with the big four banks over the past 16 years to going out and being a financial broker. Cassie has got some tea for us when it comes to buying homes, lending against business, and how we can be more financial savvy as women. Welcome, Cassie.
Thank you, Sarah. I'm so happy to be here and talking about a topic that is very close to my heart.
I mean, who doesn't love talking about money?
I love talking about money.
Great, me too. Unless you have massive financial resistance or money blocks, right? Talking about money, I just want to be the most normal thing in the world. So let's do that in our chat today.
Yeah, absolutely. Let's go. Let's get into it.
Yeah. Do you want to start by telling us a little bit about Cassie, a little bit about your world, and how you came to open up your own mortgage broking business?
Yeah, absolutely. So it is a bit of a journey. I mean, it's a bit of a journey, but I suppose it tells the story of where I've come from. So I have always been a person who loves numbers. So in school, maths always made sense to me. So I from a very young age, like even in high school, I did accounting, I did like the information technology. So it was very strong in that mathematical area. And so when I finished school, I did accounting. Now, anyone who knows me knows that I probably could never be an accountant because I talk way too much. So I did like prac, you know, when you're in year 10 and you go and do like student prac thing.
Like work experience.
Yeah, work experience. Yeah, I went to my auntie and she was an accountant, and oh my God, it was the most boring week of my life. You literally like just have to sit and do like work and not talk. So I did accounting, but worked out I couldn't be an accountant because I talk too much. And so I went to the bank. And working for a large financial institution, you can obviously have the numbers and you can use all that knowledge you have around accounting and the way things work, but you get to talk a lot too. So that worked well for me. And I loved working in the bank. The bank was amazing. Lots of great people, and you learnt so much. The thing I loved most about it is you got to work across so many different areas. So I started in retail banking. I worked in private banking. I worked in head office, and then I came back and did more time in retail banking because I actually really love helping normal people with their money. So I did spend a lot of time
as opposed to mega wealthy.
What was that?
As opposed to the mega wealthy?
Oh, well, I'll tell you about the time that, like, while I worked in private bank, it was probably if I said there's a light bulb moment in my life around money, it was definitely when I was working in private bank, and seeing the difference between a normal person and then a person who is wealthy. And the only thing that I mean, obviously there's some luck in there and there's some family stuff possibly in there, but if you take two normal people, someone who's made good money and someone who hasn't, the main thing that was really obvious to me is comfort with risk and comfort with leverage is basically the main difference. So leverage as in borrowing money, your comfort with borrowing money, and then your comfort with risk basically is the key. So that was like a bit of a light bulb moment. I was about 27 when I had that, and that's completely changed the trajectory of my personal finances. And after that, myself, and then myself and my husband, he also had a banking background. We have done lots of things that have put ourselves into the point where I could actually start a business, and my husband doesn't work and we fine financially. So it was a really big pivotal moment for me. And then I suppose learning that myself, seeing what I could do, but then trying to share that with as many people as I can along the way. Started my own business because I had a young family, didn't want to work 60 hours a week anymore. And it's been brilliant. Like, it's honestly been brilliant. I can set And so I am quite a purpose-driven person. So anyone, again, who knows me knows that I don't like doing things that I don't think are for the right reasons.
Mhm.
So I'm not the person who's going to help you with a car loan because I don't think borrowing money for a car is a great idea. But if you want to borrow money to buy a house,
Sorry,
you
do you want
do.
to say that again? Like,
Yeah,
I think
borrowing money
I
for a
think
car is
more
not a
needs,
great idea.
yeah, that needs to be like said more often, right? Because a lot of people like go out and take these massive loans on huge interest rates for a
Yeah.
car, which is going to go down in value.
Yeah. So
Mm.
I just don't do it. Like if I don't believe in it and I don't think it's a good, if what you're wanting to do is not going to put you in a better financial situation in 3 years' time, I'm not going to do that loan for you. I'm sorry. I'm just not your girl. So I'm just,
I love that though, because you have integrity. Like you are
yeah,
actually out there to be a mortgage broker with purpose. Like
yeah,
you can see people be able to thrive with their money and come
yeah,
back because they want to
yeah,
take that next step forward, not
yeah,
going back 5 steps and then
yeah.
going, what am I going to do?
Yeah. And the other thing that I love to do is so there's one thing about clients coming to you and you saying, yeah, you can absolutely do that and we'll do that for you and giving it to them. There's a whole other thing about taking the time to explain to them like why we can do it, like
Mm,
what the details of it are, why we get the results we get. So like I do spend quite a lot of time. I always have a strategy session with any client. I don't think unless they're existing client and I've like done lots for them before, so we already have like that ongoing relationship where they know like where there's a bit more knowledge around what
mm,
we've done previously and where their knowledge is at. I'll
mhm,
always take the time to explain how do we work out borrowing capacity? How do we fund, like, how do we work back from a purchase price to what we borrow and what the costs involved are? Um, with business, like, I mean, business lending is a different kettle of fish again. But understanding that if you do borrow money, why are you borrowing money for your business? Do you have the cash flow? And what are you expecting the cash flow to look like in the future if you do borrow the money? Because borrowing money for business, you generally want to be expanding your business. You want to be doing it to grow, not necessarily just pay for the bills that you've already got.
mm. Does that happen often that people are just going to go, I'm business borrowing just for the short term fix?
I think, I mean, the big thing with, so the main issue with business, full stop, is cash flow. So understanding where your cash comes in from and when it goes out, and understanding the time that takes.
Mm,
So understanding your cash flow cycle. So for example, if you're a trade, like you're in a trade and you have to buy materials, but you don't get paid till you finish the job, you
mm,
need to have the cash flow to sustain that. And so if you're in a situation where you've bought materials, but maybe there's been delays, there can be cash flow issues, and you may need to borrow money to do that, but you need to understand how does it get rectified. So just
mm,
borrowing it for willing, like not borrowing it without understanding actually what's causing the problem and how do we not have the problem in the future,
mm,
um, will cause more problems in the future. If that makes
mm.
sense.
It does, yeah. Yeah.
Yeah.
That's fascinating. Do
Yeah.
you like, is business borrowing a large part of what you do?
Again, I don't love cash flow. I don't love cash flow lending, because not okay. So cash flow lending for some businesses is very much required. Like if you are an export, like you're importing goods and you have to pay for it 6 months before you can sell it. Clearly, you're going to have cash flow issues. So you are either going to have savings to cover the costs there, or you're going to have to probably borrow some money. If you're a new business, the chances of borrowing money is non like almost non-existent. So you're going to have savings to start that. But I mean, let's say you've got a business that you've started and you've done well, you're making good money, but you can't buy enough stock to meet the demands that you have. Let's say your product has just gone crazy and you have to buy a larger shipment. You have to take a risk on a larger shipment. You may have cash flow needs there. That's not necessarily bad. It's just you need to understand what that looks like when you come out of it at the other end. So
Mm,
generally, you'll find businesses that are either struggling will have cash flow issues or growing will have cash flow issues.
mm,
So it's just about knowing when borrowing is appropriate. If it's because you're having issues, because there's actually systemic issues, then borrowing money makes it worse. If it's that you've got cash flow issues because you're growing, well, that's not necessarily a bad thing.
Right.
But
Yes.
I love lending for businesses where it's about expansion or asset wealth creation. So if you've got a business and you want to buy the premise that you're working out of, that's right up my boat because that actually is like about wealth creation.
Yeah. How amazing is that as well? Like, what a great thing to be able to build your empire. So
Yeah.
that includes not just the product or service that you're selling, but also the physical attributes as well.
Yeah, absolutely. And that's, I mean, that's one of the big things. If you're running a business and you're running a successful business, looking at where your largest expenses are in your balance sheet. And if you're running a large business, let's say you need a shed or you need a premise, your rent line is going to be a large expense. Well, if we turn that rent line into a loan repayment instead, you've got an asset that you're paying off. So it's a really, if you've got that expense already, really worthwhile looking at is there benefits in actually purchasing what I'm trading my business out of.
Oh, I can see everyone going, hang on a minute, let me take a look. So if
Yeah.
someone did want to do a business loan for something like that, is it the
Mm.
same steps, the same process as to
Very,
get
it's
a
very
mortgage?
similar. Yeah, it's
Is that
really, really similar. Yeah. So when we're looking at business lending, if it's owner occupied, like so if you're going to occupy your own premise, then you can have a 30-year loan term. Like it's very similar. Interest rates are slightly higher. Generally there's like slightly higher expense, like you have to pay for the valuation. But really, like when you come down to the loan repayments versus probably the rent you're paying, probably it's actually more similar than the calculations if you were renting a house and then going to buy a house. If you're renting a house and you're going to buy a house, generally your home loan repayments are going to be quite a bit bigger. But actually, because commercial rents are quite a bit higher, the loan repayments and the commercial rents can be really similar from a cost perspective.
interesting. What if
Mm.
someone wanted to go out and invest in a commercial property and not run their business from it? Is it a similar sort of situation?
Yeah, it depends. So you might need a slightly shorter loan term. It depends on the lender. So depends on if you're offering other securities. So if you're gonna back it with like a residential property, then sometimes you can get a longer loan term. It does come down to the parameters of it. Depends on the loan to value ratio. There's a lot of things in there. The thing I would say though is that purchasing commercial properties the big thing is that the commercial rents are often very nice yields. And the other benefit is often the outgoings for the property are covered by the tenant as well. So the holding costs are quite a bit lower.
Oh, so that might be a good little business investment if anyone was thinking about that.
Yeah, I mean, if you're thinking about investing in property, then looking at the scenarios of is it worthwhile looking at residential or is it worthwhile looking at commercial is a valid decision point. I think the big thing though is that if you are going to invest in an asset, you need to understand the asset. Most people understand residential properties because we all live in homes, we rent homes. They're quite there's lots of knowledge around that. If you are thinking about investing commercial, probably need to spend a little bit more understanding that market, making sure that the asset you're going to buy is a good asset and is going to appreciate in value because that's kind of the reason you want to invest in it.
Mm.
Hmm.
Some really good tips there. All right, let's move in. You mentioned everyone, pretty much everyone lives in a house.
Yes.
Let's talk about mortgages for us to live in because a lot of people I talk to, they are still like, oh, it's overwhelming. There's a lot of
Mm.
confusion. They're thinking about that might be nice and it's still a bit of a dream. They don't even know the steps to get them there to the point where they would want to talk to a broker. Like even talking to
Yeah.
a broker seems like a really scary step for a lot of people.
Mm.
Where should we be starting? What should we be looking at first? How can we get all our ducks in a row?
Yeah, that's an excellent question. And I think I actually I was talking to someone the other day and probably the key thing is one of the key questions we get asked is how do I know that I'm ready to buy a property? And there's some things that you probably want to have in place to go, okay, it feels like might be a goal that I might want to have. And obviously, when we are looking at borrowing money, having an income is kind of important. So like if you're serious about buying a property, having a house to live in, you're going to have some type of income, stable, consistent money coming in. It's probably a big tick.
And what about for the sole traders out there? Like,
Yeah.
what are the
Yeah.
differences between that or employed people?
Okay, so employed people are wonderful because they get pay slips. Like every fortnight or week, they get a pay slip and they send me the pay slip and we use that income. It is a little bit more work for a self-employed person because they tend to need to do a tax return. And so what we're really looking for, and this is probably one of the biggest confusion points that I have, is that I'll be talking to a client over the telephone and I'll be saying, okay, so what's your income? And they'll tell me what their business income, and I'll be like, oh yeah, that sounds fine. And then when their tax return comes in, that's their business revenue, not their profit. So big tip for self-employed clients is when we're looking at borrowing money, particularly as a home, like as a after business expense, what we're really interested in is what's that taxable income. So if you're a sole trader, it's going to be the taxable income. If you're a company or you're a trust, it's going to be what wages, what income do you pull out of that company or trust. And then often we can also use if there's profit in the company or trust if you are sort of the key director or like main director, main shareholder. But it is that bottom line, not the top line, that we're really interested in when we're looking at home lending. So you really need to be aiming, like if you are, and this is something actually I talk to business owners about all the time, is if you're going to run a business, now running a business, I run my own business, it is amazing and great, but it is stressful as well. So if you are going to run a business and you are going to be doing that, you want to make sure that you are being financially rewarded for that. So if you are, like I worked in banking, in finance, historically, we get paid quite well. It is a lucrative, anyone out there who's looking for a career change, look at banking. It does pay well. Like it is an industry where you can go and get a good income.
Everyone knows this.
Yeah.
There's some key professions out there, right?
Key professions. Banking is one. Yeah, it is an
Yeah.
industry where you can, if you work hard and you like try, you can work your way up and you can create a good income. But if I'm going to run my own business, I want to be bringing in the same level, well, similar level of income for the risk and the additional, I suppose, not, I think it's probably more risk and uncertainty rather than, I'd probably call it that rather than stress. I don't think it's any more stressful. It's just that you don't have that payslip that's coming in every fortnight. So you want to kind of have some reward for that. So if you're looking at starting a business, you've got to say, well, can I make more money in this business than I can going and having a job doing the same thing? So if you are a painter or like what sort of, if you're I don't know, you're a massage therapist and you go and get a PAYG job as a massage therapist and that's going to be earning you 70 grand a year. Well, then in your own business, you want that profit after you've paid all your business expenses to be that 70 grand. Otherwise, go and get the PAYG job.
Yeah, that makes sense. And I think that can be a massive roadblock when it comes to a lot of people because we see the shiny, dangly goalpost of being our own business owners. And yet sometimes sometimes it is stressful and sometimes the financial reward is not there. And sometimes you are working a lot more than what you would be. So that is a great consideration to take into.
It's really interesting. And I think the thing is people get a little bit, you can get complacent as well. And where things are comfortable, like you might be really comfortable. I said this, I had this thing last year where I was like, I was really comfortable. Like my business is going well. I'm working probably a bit more than I would want to be working at the moment or last year particularly. But I said, I was like, I was in like a rowboat in the middle of the ocean. I had no oars, no map. Like we had shade, we had food, we had water, we're happy. Like we're fine. No direction, nowhere do I know, like no idea of where we're going or what we were planning on doing next because we were comfortable. I think business owners can get to that point where they're comfortable, everything's going fine, nothing's broken, but maybe the reward is not there. So I think that's one of the big things I have learned, particularly over the last 6 months of my business, is that if you're not looking at what the future might look like, you're probably not like making the most of the benefits of running a business.
That's a great reminder. I love that. Yeah.
Yeah. Because
So
you can get really comfortable, and then before you know it, you're like, oh, this is not exactly what I wanted, but you've kind of gone too far down the path, or you're like you got to the point where you're like burnt out because you're working too much because you haven't put anything in place because you're like everything's fine.
fine. And suddenly you're juggling everything.
That's right.
So I guess quarterly reviews are really helpful for that.
Yeah, absolutely. And I mean, okay, let's get back from a finance perspective, looking at like if you are in business and if you do have big goals, I would say talking to someone as early as possible about what your goals are is super important. Like, so just today, I've sent off 3 emails to clients who've reached out and said, like, we've just started our business, or we're like 6 months into our business, so we really can't do anything yet. Like, that's a bit too early. But they have a goal to upgrade a home or to buy a new home. What does my income need to look like to do that? And I can work back and say, well, you need your income to be 70 grand a year to achieve that goal. And we can kind of come up with a plan. And then it's your job to go and like make sure your business is going to produce that income. And then the big point I'd say there is, as business owners, being across your finances, super important, super important. So looking at, like, if you do it yourself, looking at your profit and loss, looking at your balance. I don't really look at my balance sheet too much because I'm not, like, I don't have any debts in my business and my assets aren't really like changing too much, but I look at my profit and loss every month and I know how much is going out and how much is coming in and what profit I'm doing. And then I'm making decisions of what I do with that profit throughout the year so that I'm working on using that money as best as I can while it's sort of sitting there as well.
Well, what kind of tips would you have for people, like if they have money sitting there, like to make sure it's working rather than just...
Well, I mean, if you, so some of this is probably your accountant's advice. Accountant about it. But I mean, the thing is, you can, as long as the money stays available to the business, you can have it sitting in, for example, a higher interest account. You could have it sitting, you could put it into the share market if you wanted to, if you had a higher risk tolerance. You could put it in an offset account and have it there, reducing your interest maybe on a loan, not spending it. Don't spend it because it needs to be able to come back. Or you might be able to make some decisions to grow your business because you know what your cash flow looks like.
Very good. So don't just leave it idle, make it work for you.
Or don't even leave it just in your, like, so something I like to do is I like to sort of particularly my business income, I like to separate it. So tax comes out and then profit kind of comes out as well. And so I'm not leaving my profit in my operating account to then just be whittled away. So defining when you get paid, like what is the part that has to go to tax and what is the part that is that profit, so that at the end of the year we have got some income, some additional income. I would also encourage people to pay yourself a wage. Like if your business is not earning enough to actually pay you a wage, then you're basically working for free. Like it's like slave labor almost. And there is a time like at the start where that is, but if you're like a year or 2 in and you're still not really like pulling a consistent wage, then it's probably a reflection to sit down and say, well, what is the goal here? Is this something that is sustainable for the longer term?
And get really clear on it.
Yeah.
Absolutely.
And it might be fine. Like you might have a hobby business and you might just love it, and that's fine, but call it out for what it is.
Yeah. I love how You just break everything down like so simply. Like when you're talking finance and money, like you're just like, this is what it is. And you don't put on this terminology or pretend it's anything that it's not. And I love that when we were working together doing my mortgage as well, like you were just like, right, this is it. This is, and you were like
Yeah,
really methodical. You took all the guesswork. Like I didn't leave our call being like, what did she mean? Like
yeah,
it was just super clear. And you were like, this is what you need to do, Sarah. This is what I'm going to do. This is the point we get to. Let's
yeah.
talk again here. Like it was just the easiest mortgage process I've ever been through
Oh, that's
when
so
you have
good.
been guiding me. Like it's just amazing. Um,
Yeah. I love that because like that's so important to me because there's no point me keeping all the gold. Like if I keep all the gold, that doesn't add any value for you. So I love to share my knowledge. So this is okay. So if we reflect back to my first, this is why I couldn't be an accountant because I just talk like way too much and I love to share. So I'd like be billing like it would just never have worked. I might
and
have
no
made a
one needs
lot
to
of
know
money.
it's a spreadsheet. If you love it or you don't. Oh, that's
I mean, don't get me wrong, Sarah, there are some amazing accountants now that do an excellent job of that advisory piece. So it's a profession that has absolutely changed. And I don't probably feel the same way as I used to about accountants. They're wonderful.
wow. You never know. Maybe you can have a
Maybe
career
I'll be an
too.
accountant next. No, back to
You
my
heard it
mortgage.
here first. All right, Cassie, why are men so much more comfortable talking about money and finance and investments than women? Because I know that men can go to the pub for the afternoon and they come back and they're like, oh, old mate John, he's diversified and he's invested in this and he's got these hot share tips. And then someone started day trading and then
Yeah.
someone else is doing this. And they talk about it so openly and comfortably. But when you catch up with women, we are not talking about money. We're not talking about finances
Mm,
and we're not talking about growing our wealth.
mm,
What are
mm.
your thoughts on that?
Oh, gosh, it's such a hard. It's interesting because I always remember my husband he when he was younger with his mates, that is exactly what they would do. They would go to the Victory Hotel, sit around a table, drinking beer, like this is drinking beer, talking about tax tips. Like that was what they did.
Yeah.
And so I having been in, so I probably would say that I am really comfortable talking about money. It's not really a thing for me, but I'm always really mindful of how other people feel about talking about money. So while I will absolutely, if you start a conversation with me, I will absolutely like share. I'm really mindful about what people's comfort level is. And you are absolutely right. Women do not like talking about their financial situation. And I think that's often because maybe there's a lack of empowerment in there, a lack of knowledge. And if we think about why women don't talk about things in general, it is because we don't want to necessarily look silly, like look silly or like unknowledgeable or uncomfortable with it as well. So I think if people can take away one thing from this, I think there's a lot of good happening in that space, particularly with social media. I think younger women are becoming much better at it. Maybe it's a bit of a generational thing as well, like maybe our era, maybe looking and learning from some of the younger kids
Hey, what
out
are you
there.
saying?
What were you saying?
I look younger than I am here. Don't ruin it.
But I mean, like, it's like anything. Like, you won't learn or you won't change anything unless you focus on it. So I would say if money is something that maybe you haven't been comfortable with in the past, or maybe you feel like you don't have knowledge around, then that is an indication to possibly go and get some knowledge, maybe start some conversations.
Yeah.
Book
Listen to
in
some
and have a chat
podcasts
to me.
about,
I'm happy to chat to
yeah,
anyone about money.
exactly. Cassie's there. There's so many
Yeah.
books that
There
have been
is so
written
many
about
books.
finance,
Yeah. And there's
podcasts
quite a
out
few books written by women now as well. Because I think the
there.
other
Yeah.
thing as well is we do approach it differently to men. We are more actually they say that women make are much better investors than men because we're much more considered in our approaches. We tend to not try and chase like the risky high return things. We are a bit more considered and I wouldn't say risk adverse, but more calculated risk. We take calculated risks. So that makes us better investors. So
And also, like, we are generally more emotionally aware and
Yeah.
stable. And when you are investing, like, emotions factor in. Like,
Yeah.
if you are putting money out there, it can be a good return or it could take a dive and like to be balanced while you're waiting for that situation to play out. Like, I think
Yeah,
that's a big
absolutely.
part of why women
And
are better investors.
yeah, and that's one thing I'd say is anything you're going to do, it's probably with anything in life, but particularly money. If you're going to make a decision with money, you need to be comfortable with it.
Mhm.
And if it's going to be, and I say this to clients all the time, I'm like, we're gonna set up a loan that you're going to be able to sleep at night with. If you're doing something with your money and it's causing you to not be able to sleep at night, it's not the right decision for you, no matter what it is.
Mm,
There's always sort of different decisions you can make that
yes.
add a bit more comfort for you. So
Mm,
I'd say like understanding what the options are, understanding what's available, and then really understanding what it is that you're doing.
mm.
That's how you become more comfortable with the
I
decision.
love that. Yeah, just like anything in life, if it's keeping you awake, that's
Yeah.
not going to be the right
Not
decision
going to be the
for
right thing
you
for
at this
you.
time.
Yeah, exactly. And maybe it is like maybe it is going to be the right decision, but maybe not right now. Maybe you need to go away and do a bit more research or
Yeah, we'll
become
ring you and
more
ask the
comfortable.
questions, like you
Maybe you
say.
need a bit more
How do I
savings, like to back it up. Maybe you need
yeah,
like there's lots of things to consider as part of it. But yeah, if something's causing you lack of sleep, then that's a little signal from your body that they may be feeling a bit unsafe.
that's so great. All right, one more question because I know our time frame is nearly up. I hear a lot about investing in Birkin bags. What do you think about this? Is this a good investment? Are
I
luxury
mean,
handbags
it
a
could
good
be.
investment?
It could be. I mean, I think the thing is you probably need to not use it and put it away. So then maybe it's not something you want. I mean, but like, yeah, I suppose you could kind of go, well, I mean, it's like crystal ball sort of stuff, really. Like some of those things, I mean, I would imagine investing in a Birkin bag would be maybe a riskier investment because the chances of like, I would go, what's causing the return on it? But in saying that, like, I mean, there's artists. Like, go and buy some local artist, and when they die, their paintings might be worth millions of dollars, Sarah. Like, who knows? So, I mean, lots
Let's
of
roll
different
with the
things can
dice.
be investments. I think the thing is, it's probably a riskier one. Like, you kind of go, what's the risk versus the return? Might be high chance of return, but the risk of that coming through might be very low. I don't
Okay. So
probably
perhaps this
wouldn't
is
put my
something a
money
bit more
there.
stable. Yeah.
Particularly because like to have something like that added value, you would have to put it away. Like it would have to be pristine, I would imagine.
Yeah. Well, there we go. Not that I'm in the market for a Birkin, but I do see it all over social
Do
media.
you
And I'm
like
like,
them? I don't know. I don't even think that they.
I don't think I'd wear one, to be
No,
honest.
I don't think so either. I don't think so either.
So it
Um,
would sit in the cupboard because I wouldn't touch it. So, but yeah, I
yeah,
always find it interesting. Like I personally get a little bit curious about, pink diamonds, they go up in value. And I'm like, well, that's great because they're so pretty. But I'm like, but they've got to sit in the safe and you can't lose
yeah,
them. Things like the handbags, it blows my mind because I'm not a fashionista. So I'm just like,
yeah,
whoa, like the price
yeah.
tags are different. I'd rather have that much money invested in the stock market personally.
Yes,
No, I'm
yes.
not giving financial advice.
And I think the thing is, I think you come back to like actually, it comes down to that knowledge piece, doesn't it? Because if you were a fashionista and you had the knowledge, you'd done the research, then maybe you'd feel much more comfortable with it. So I think that comes back to that point around like the knowledge piece and what you're
What you
comfortable
do.
with is what to follow. So if
Oh,
investing your money in a pink diamond doesn't feel comfortable to you, I probably wouldn't do that. Like it's not my area of expertise, so I probably wouldn't do
mm,
that. But someone who is a diamond expert probably would.
yeah, absolutely. That's such a beautiful point. Wonderful. Oh,
I
thank
mean,
you,
Simon,
Cassie.
Sarah, you might have a safe full of diamonds. You might be the next investment.
Sort of the construction in the background is just putting that
You're
safe.
digging for them.
Maybe in 10 years, honey. Maybe in 10
Maybe,
years.
maybe,
Yeah.
maybe.
I'm putting it out there. Put on the vision board.
I
So
think the thing with investments though is it's like um having not all your eggs in one basket. So if you're going to do something like that, like do it because I mean, and a good portfolio will have a bit of everything in it, and maybe some product. I don't know. People invest in vintage cars. Like if you're a car guy or a car girl and you know about cars, people buy old cars and sit on them and they make heaps of money with them. But you have to know what you're buying. So I wouldn't do that, but lots of people do.
Yeah, I understand that.
Mm.
My friend is a car person and that's what they're doing. And I'm like,
Yeah.
I don't get it. But
No.
yeah, each
But if
to
you're
their.
in the know, you know what you're doing. So
Yeah, exactly.
mm.
Oh, fantastic. Oh, Cassie, thank you so much for sharing your knowledge today.
No
Thank you for
problem.
the open invitation for people to reach out to you and chat finance if they have any questions, queries, if they want to know how to get to that future goal they are going to. What's the best way to connect?
So I'm on all the social medias under Grow Well Financial. And yeah, and that's probably the best way to reach out to me. We have a booking link, nice and easy. You can choose a time that suits. I generally start with just like a call, a chat, basically. I start with. So if you do have a goal around probably anything that's going to make you money, make you money. You can reach
Not the
out to me.
Perkins.
Well, no, maybe the Birkins. I don't think I could fund the Birkin. That's not good security. But if you're wanting to buy a car, I can definitely refer you to a great asset finance broker too. That's not funny.
Fantastic. Thank you for joining us, Cassie.
No problem.
Thank you, everyone, for listening in today. Don't forget to subscribe so that you get every podcast episode right here. And I am sure you've taken away at least one or two of these beautiful golden nuggets that Cassie has educated us on today. Thank you so much. All the links will be in the show notes in the description. And I will see you in the next episode of Embody Your Empress. Bye.